Ladies and gentlemen of the crypto space, we're live on a Wednesday, February 26th at 11:42 a.m. Last couple of days have been quite the ordeal to have to deal with. Folks have been comparing it to China's ban of Bitcoin. It's the largest selling, by some reports, that we've seen not only in a long time, but historic. And the fact that Bitcoin is at 87,000 is quite extraordinary. This would have been a very different story a few short years ago. The simple observation is that the buy pressure to counteract the sell pressure is quite different than it historically has been. Additionally, other tools and other markets, obviously traditional financial markets, have played a significant role in the relative stability of the asset's price. Uh, that all in all, there's so much that could be looked into, but that's not what I do. I come to the most obvious, most reduced conclusion possible. It's different this time. It's quite different. Everything's always different. History rhymes, it doesn't repeat. It's a very common phrase. But I like to focus on the good things that are different, the things that are motivational or optimistic or good feelings. That's the right perspective to have, not just on markets, but as you go through life. You want to see the good in things. You want to see the path forward that'll always be contentious, but you want to see that things are being done reasonably. And that's all it is. Good and bad are subjective terminologies. The most important thing is reasonableness and rationality. Everything else will drive you nuts going back and forth between everyone's endless opinions. So, in some regards, everyone's endless opinions are irrelevant. Opinion is irrelevant. What's pertinent is the facts and any rational inspection thereof. So, keep things simple, folks, and don't get lost in the noise. Curve was down to 42 cents, back up to pretty much 47, 46.8. Bitcoin dominance looks actually quite decent. Um, Full retrace of the entire move, about 61%. We're not encroaching on the significant wick, pin bar of sorts, shooting star, if you will, but we're not encroaching us. Not like we're 50% back on a retrace of this wick up to like 62.75. This was a massive event. You don't just have a candle like that. That candle is really depictive of a total structural distortion of the market. And the fact that it's a candle means that distortion was transitory. So the market literally turned upside down and then right-sided itself. It's kind of like thinking of a boat flipping over, but it finally finds its way to balance itself out through buoyancy and whatnot. That that candle is quite extraordinary to look at. Um, Bitcoin chart, nothing really compelling to look at. We're not even 25%, let's say 33%, fine, through the guppies, and that's from a weekly perspective. If you go to the daily perspective, let's see if we get a little bit more constructive, which we do. You're right on the time weighted average price. Is that the time weighted average price? Should be. No, that's not drawing. I think that's the 200 EMA. Yeah, that's the 200. Isn't it funny? You'll have an event like what we experienced over the last couple of days, and then you look at the chart. You're not knowing what to expect when you look at the chart, and it literally smacks right into a line. And that's almost always the case. 200 EMA for Bitcoin, clearly a mean regression on the daily. Checking in on the S&P. Okay, that was a 100 daily mean regression, literally right on the 100 lines. There's no, it's not like this is just a line drawn. This is the average price. And the reason these types of lines are significant is because everyone looks at them. Everyone knows these types of structures, these patterns, these type of technical pieces of data to inspect. And therefore, in aggregate, on average, the behavior of people tends to align with these average values. S&P 100 daily mean regression, Nasdaq even a little even cleaner, 100 daily mean regression. Ethereum USD, yeah, no, that looks like shit. You go to the weekly though, that's quite constructive. So weekly, this is a heck of a, might be the largest triangular compression in history. Clearly, it's a higher low from the lows in October of 2023, and two giant wicks right into the 200 EMA on the weekly. Okay, so folks look at all sorts of EMAs, SMAs, and volume weighted averages, and I look at the time weighted average price. But in the end, they all pretty much tell the same story on one time frame or another, weekly, daily, monthly, so on and so forth. So if something is like 21 week, people looking at the 21 week, I prefer a longer time range moving average of 100 week. All right. So, but if you switch over to the monthly, they'll all line up. It's just the way it is. So you don't have to inspect all of the MAs, but then again, the Guppies kind of offers that perspective, food for thought. But Ethereum dollar denominated, this is a clear uh, 200 week exponential moving average mean regression. Um, Bitcoin was clean, much more support on Bitcoin. It wasn't a weekly regression, not even close to a weekly mean regression of any kind whatsoever. But on the daily, that's a mean regression. On the daily, you see, you'll find a moving average on one time frame or another where the mean regression occurred. That's just the way it is. Let's see if there's anything on gold. Reminds me of Bitcoin's um, uh, uh, divergence from the mean. It's just significantly diverged from the mean, which means it's at a significant premium for what it's worth. You see what I'm saying? There's always a mean regression in the data, especially after a volatility event. All right, gold, 4 hour, 100 SMA mean regression. I mean, it's clear as day, unless someone, please feel welcome to scream at me saying I'm seeing things, but it's right on the 100 on the day on the 4 hour. It just is what it is. Oil took a nice little dip. Let's see if we get anything constructive over here. I mean, really got to go in. No, this is a breakdown. So when you diverge from the mean significantly, it's not a mean regression. You're divergent, and you are it's, that's a pronounced move, sometimes indicative of trend reversal or some sort of structural change in markets. But this is clearly a breakdown through pretty much all mean regressions to the downside. Significant volatility. So if you're talking about oil prices, yeah, you're also talking about the dollar, because oil is obviously priced in dollars, but when you're thinking about oil, you want to think of the value of the dollar. So let's go to maybe an earlier time frame. Oh, that's constructive. So the daily time frame on the DXY is it's early, but that is a retest of the 100 SMA to the downside. So retests, supports, mean regressions, these are all meaningful inspections. So actually, it's constructive confluence that you have a 100 SMA mean regression in the S&P and Nasdaq, and the daily on Bitcoin, the 4 hour on Ethereum, was it the 4 hour on gold as well, or whatever. The point is, combined with a downside mean regression and a retest, which is this wick right here, into the 100 SMA from the downside, is confluence suggesting markets are pricing in further dollar depreciation. Thus, they priced support expression for risk markets. Obviously, if the dollar bounced off the 100 SMA, you wouldn't have seen those. You would have seen breaches to the downside of the MAs on the risk assets. A pretty simple correlation. Dollar down, everything else up, dollar up, everything else down. So if you see support or resistance from a dollar perspective, it's going to line up with the risk assets on the other side of the MAs, from the top side or the downside. Was a decent VIX spike over the last couple of days, up to 21. Last time we saw that was in January. A couple of VIX spikes, January. And obviously in December, that was a pretty big spike. Let's zoom out a little bit for the fun of it. Completely squashed. Wow, from a weekly perspective, that is a VIX smush. But December was the last biggest, and then obviously in August of 24, that was a massive spike. That, if you remember, one, that was a historic spike, and two, that was an incredible smush. VIX smush. Volatility suppression 101, that's the name of the game. That's how you maintain the rules based order and the status quo, keep the financial system humming, further entrench dollar hegemony, so on and so forth. And that is pretty much behind, that is the guiding principle behind everything and anything that you hear in headlines and anything and everything you hear in policy rhetoric. It's always about maintaining the status quo. And when you have disruptions of the status quo, things start to get volatile. Okay, so that's why in '08 you had the mortgages implode because the mortgage bonds were backed by mortgages, but the mortgages went belly up, so prices revalued pretty significantly. We have yet to see what well, Doges are really cutting too much of the workforce. It's what 2.5%. But the implication there is on everything: people's capacity to pay mortgages, people's capacity to pay all their bills. Um, a demand for employment, the private sector has to pick it up, which means increased, decreased wages, because now there's more supply of labor. So obviously, I'm taking the human out of the conversation, which is something you should do. Um, while we should always respect uh, um, the empathetic reality of this type of conversation, there's a human behind the inspection of the data. But as you have increased unemployment, you have decreased buying pressure, which means inflation rolls over. So that was something we also saw in some macro posts. Inflation is basically back at 2%, while China is still going through a deflationary collapse by all possible definitions. It's just the reality over there. It's like 2008 on steroids in China. The trillions and trillions and trillions, like 18 trillion is maybe vaguely a number I remember hearing. It's just a massive collapse of financial activity in the financial economy. So now, if from a Chinese um, real economy perspective, there's a lot of activity. The shopping malls are filled and people are going on with their lives, but the financial economy went through a significant collapse and is still going through a significant collapse. Um, Not much to take away from the China M1 headline. That was a lot of hyperbole, mostly a reporting modification. But in the end, as a lot of macro folks would probably agree, the only way through this is a large Chinese yuan deval. And the only way they could possibly do that is with geopolitical collusion with the powers that be, which is primarily the United States, but also other nations as well, to such that the deval doesn't significantly alter cross currency pricing. You don't want to create that kind of volatility in cross currency pricing. The worst kind of volatility is obviously in the bond market and currency. So obviously volatility in the stock market gets people's panties in a twist, but the bad volatility that really triggers everything, it triggers everyone, it triggers the volatility in equity markets and crypto markets. It is dollar volatility and bond market volatility. I wish we had a dollar market liquidity indicator, like the move, but for dollars. But as you can see, we had a nice pop in bond market volatility over the last couple of days, back up to 96. Interesting trend for the last pretty much Q1. Frankly, it's all Q1 2024. We are basically where we were in December of 24, Q1 2025. So we're basically at the same level we were in Q4 2024. So nothing has happened. In my opinion, that means there's no takeaways to have. There's no decisions to be made. It's literally gone horizontal in a crab market. We don't have any directionality conclusion. Like if we saw He's starting this chart's starting to print higher lows and yields starting to blow out. Then you could speculate on the stabilizing uh, uh, realities occurring in the economic system, and you take decisive courses of action. But that does not yet present. What presents is nothing for Q1 2025. Um, so we're back in the same equation, standard equation, dollar down based on administration policy, based on a need and desire to maintain the rules-based order and the status quo from the highest of levels of global financials. And that's the story you guys know all too well that comes out of this stream. Any other takeaways? Not takeaways. That's about it. Total three we could take a look at. See if we can get some shorter term MAs for a mean regression. Oh, go figure. Right into the 200 on the daily. There's always a moving average. When there's a big move, it's just the way it is. So literally all this was a 200 daily mean regression, which is a lot because we were up at 1.12, which is a pretty large decline um, from top, let's say December 24. We're down 29%, 30% in total value, which is not an inspection I really like. This is total value excluding Bitcoin and Ethereum of not Bitcoin and Ethereum. I don't want to use the derogatory terminology of altcoins, but value doesn't interest me much because then you could go over here and look at USDC and USDT and be like, oh, this beautiful chart is literally straight up and to the right. Dare we factor in the endogenous stablecoins, not USDC, not USDT, the stablecoins that are rather printed from within these crypto markets using on-chain native collateral? It's higher. I mean, it's not much higher because USDT and USDC dominate overwhelmingly the quantity of stablecoins available and in use. But there is certainly a quantity of stablecoins that are meaningful. It's billions of dollars of stablecoins that have been produced from within these crypto markets. DCA man in the house. Joel in the house. Good morning. Mateo, connect the dots. Killis. Hi, Dean. Hello. Sergio. Gazika. Soon. Good morning, good afternoon to all. George, hey Cap, saw your comments on Frax's bonds. Do you still see a future for Frax? Are you up to date with the stablecoin backing developments? Well, it's a fully backed stablecoin at this point. Should find its way having completely similar overtones like a US. It's a hybrid USDC USDT because they back with bonds, but they have the institutional. They have their counterparty, their own counterparty in MeatSpace, the company that has a capacity to manage dollar deposits in to gain exposure to RRP interest rates through banking institutions. Aside from that, bonds. So if they have a complex portfolio, so you either have a simple portfolio or a complex portfolio, simple being, all right, it's just dollar deposits. In that regard, it'd just be like a fiat on and off ramp uh, type product. But Tether is more of an investment portfolio, diversified between dollar deposits as well as varying types of debt products. So I think that's the future for Frax, varying types of debt products, a complex balance sheet, but of with significantly more transparency than anything I've ever seen. Anyone, anything anyone's ever seen with their Frax fact sheet. Frax facts. What a stunning on-chain, real-time display of data. That's lovely to see as always. Lovely to see. So I have a high opinion of Frax, always have. Clearly, I'm biased. I have exposure. I've had exposure since Frax launched. It's been years. And there's not much to take away from that, considering my capital management methodology. It's just something I own. I choose to own or I choose to not own. That is my equation. and it keeps it very simple for me. And the fact that I cannot sell it because it's voter escrow makes it even simpler. It's just something that is there and will be what it is, and in the future, whatever it becomes. I have no capacity to influence any of it. So it's just binary. Do I own it or do I not? In which case I do. So I will get to see in the future what it becomes or what it does not become. It's just a massive, massive idea. Extraordinary tech. But you guys know what we often say, best tech isn't always the best investment. But with regard to it being the best tech, it was something that I certainly felt was a good choice to acquire all those years ago, and I'm still quite content with owning it to this day. They're looking to add more inflation to FXS, have made the community roar. Roar, good or bad, that's another story. Inflation isn't necessarily a bad thing as the majority think. There's pros and cons to everything. Uh, it's everything is an endless debate. What matters is I have to tell my friend that I will get back to him. One second. Okay, chill out, dude. Um, I look forward to them iterating. I know that the teams that I'm interested in, the protocols and the businesses that I'm interested in, they don't do things on a whim. So there's a lot of intelligence behind these teams, and anything is a highly calculated, um, as a result of a highly calculated conversation with the choices and decisions that could be made. So in that regard, I look forward to whatever they come up with. That's my 2 cents. Zika, Cap, have you seen latest data from Fluid? It's super impressive how they managed to eat market share from both Uni and Curve. Well, it offers a higher rate of return. I'm more interested in Bunny than Fluid. It does the same thing, built on Uniswap v4 rather than building its own infrastructure, which is what Fluid did. Um, Albeit that doesn't really offer anything conclusive. Um, I'd have exposure to Bunny, so there's bias there. I don't have exposure to Fluid. Clearly, if I had exposure to Fluid, I might be saying a completely different story. Suffice it to say, both pieces of tech are meaningful. I think, obviously, liquidity provisions the concept of an exchange, an automated market maker. A lot of that liquidity is sitting dormant. So the point is, rehypothecate it. In crypto, block by block, you can recall rehypothecated assets through an Aave, for instance. So that's exactly the point. So if you got liquidity sitting there, just deposit it into Aave, and if that liquidity is needed within the entire transaction, pull the liquidity, facilitate the transaction, and then redeposit the liquidity and rehypothecate after the transaction is complete. And you can literally encapsulate all of this into a single block, to a single transaction. Um, so that's interesting because that is certainly an innovation. There's only two protocols that I'm aware of in the entire crypto space that do that, which is basically Fluid and Bunny. Certainly impressive to say the least. They have a lot of deposits. Nowhere near Aave, uh, but that doesn't mean much because there's always, in fintech, there is second best. There's a lot of best, different degrees of bestness. So there's great products, great tech, has a lot of deposits. It's highly used, and that's all meaningful. So these are all factors and considerations in your assessment of what is good tech, and then you have to take what is good tech and factor that into the investment calculation. What is a good investment? So what investing is a derivative of first identifying good tech. Hope that helps. Thanks for the answer. Are you active in governance votes for your VE positions? Only the critical governance votes. I am a microscopic minority vote rights owner. My vote is almost non-existent or negligible to say the least. Whether I vote or not pretty much has zero capacity to impact the output. Certainly, that is the case as well with Curve. Albeit with Curve, for instance, my voting rights have a meaningful capacity to affect liquidity provisions. That's primarily because a huge amount of depositors, voter escrow owners, don't vote on liquidity provisions. They have different motives. Uh, for instance, if you have um, $50 million or $10 million, and you're not really interested in an extra $1,000 a week, $2,000 a week, whatever, what have you. So they don't have enough financial incentive to participate in the LPs. So everything's about incentives. But on a positive note, that leaves that kind of capital available to the people that do want to participate in LP provisioning. Um, so that is definitely something I think about often because I'm like, a lot of people should think it too. A minority owner of voting rights, all right, you don't have much power, but you got to remember why people do things. Humans are an incentive based species. We do things because we're compensated. It's literally the foundation of employment. You only go to work because you're compensated for that work. Um, Albeit there's altruism and volunteering or not. So it gets complicated. But the point is, in terms of compensation and incentive based human core values, um, that is critical to assess. So even a minority vote owner could still have a great reason to apply their voting power because of incentives. Anyway, I hope that made sense. Wasn't the clearest thoughts, but you guys are accustomed to that nowadays. Fugu's in the house. Good morning, all. Also, shadow. I mean, shadow's just disgusting. Today's Wednesday. This is just mind-bogglingly gross. 124% rebase APR. That's what, 2.25% for the week. That's literally a 2.25% bump in governance ownership for the week. Now, obviously, in order to get this kind of depreciation, uh, people with large amounts of X shadow had to sell. Now, I would assume the vast majority of that is LP provisions, um, but I would also assume that not all of it was LP provisions. A great deal had to be from folks that had deposited their X shadow for staking purposes. So I would imagine the rational takeaway is that folks that take the rebase and continue to accumulate will go up in ownership percentage over time, which is kind of the expectation. You get the rebase and you're going to own more and more percent of the revenue of the business over time. That just kind of makes sense. And this happens to be a very interesting mechanic where the rebase comes from people selling 50% of it. So that results in decreased sell pressure because only 50% of any X shadow that anyone sells actually hits the market, and the other 50% is just literally redirected to folks that are staking. So, very interesting dynamic. We've seen taxes on sales before, but thus far, you know, we'll know more in hindsight in months and a year or two. But this is interesting to say the least for now. Top it all off, the cash flow is just through the roof. 3.255 million dollars for the week in vote rewards. That's just disgust. That's gross. That's gross for something that just launched. That's a massive amount. And what's interesting is they adjust. Oh no, it is. If you hover, it's 31,000 X shadow. Okay, look at this. Would you look at that? That is a positive week. Someone ping the shadow team or throw it on their Discord that they're actually net positive for the week. Were they live for like a month? Where the vote rewards are greater than their epoch emissions? Already? That was quick. That was very quick. And what I'm saying, just for everyone's clarity, is the vote rewards are currently greater than the epoch emissions. So that is what these VE33 exchanges uh, look for with regard to at least a component of stability. And that's a takeaway from the limited history we have of these VE33 style exchanges, where all of LP revenues are directed towards voters, owners. Um, so it's an interesting balance to have achieved so quick. Coco, I'm thinking about deploying some stables here as underdeployed. Which coins is worth resourcing in that are at a discount? That's not something I really talk about. I'm not. I don't. I'm not in. You can't ask me what's a good buy, my friend. I. You know what's a good buy? The things that I own. Why? Because I already own them, and I don't have to think about buying them. Everyone has to build their own portfolio, and their own portfolio is a manifestation of all their work, all their time and effort. Once you own something, that's the biggest thing I encourage. It's a purchase. It's not a position. So I bought it. I bought something. I own it. I don't really think of the price of it. I don't have a capacity to liquidate it almost all the time. Can't really sell any of the stuff that I own. So what I will encourage is the base rules. Own more assets. One. Two, know when to stop buying. It's kind of like a would any self-respecting gamblers anonymous or anything would encourage. Know when to stop. Too much of a good thing's a bad thing. I don't know. It's stuff like that. Um, and all the other base rules. Um, how much does it cost? How much is it paying? And how likely is it to continue to pay? What's at a discount? I would quit. Shadow's not at a discount. That's not at a discount. That is at a hell of a premium. It's up way over 10x from February 4th. It's way up over 10x in a month. Certainly not a discount there. We could go over here. We could look at the carnage. This is my small caps inspection. I look at the big stuff on Trading View and I look at the small caps on Gecko Terminal. There's a lot at a discount. But what is a discount? A discount isn't just numerical. A discount is also psychological versus conviction, meaning if the market psychology has priced something at has sold it off and it's significantly depreciated, but they're wrong, and that's a conclusion you come to based on your due diligence, which obviously has a risk profile associated with it. That is what a discount is. A discount is seeing the depreciation and you saying they're wrong. So a discount, as much as it seems like, oh, is it or is it not at a discount? It's a very subjective thing. It's a gut instinct because prices could always go down. Everyone could sell. It's literally what happens with meme coins. It's just capitulation begets capitulation and rinse repeat over and over again until there's no one else left. And then there's zero volume and it's like, oh, it's completely dead. So what is a discount is not something to easily answer. Prices could always go lower. Man, equal and solidly made no moves on Sonic. Shadow is completely dominating. SwapX with a powerful move off the bottom. It was what, 500%? No, 300%, 350%. That's a heck of a move. This has all the hype right now. Similar hype to what Shadow was a week ago. The memory of the crypto space is remarkably short, as everyone surely must know. Um, I choose Shadow, but I'm biased because it was given to me. But that's something we talk about. The best positions are free positions based on already existing positions. So my bias makes sense, and that's okay. I'm not in a position to be spending capital right now because I have defined that I'm in rule number two. Rule number two says know when to stop buying, and I'm done. I own everything I want to own. I own everything I need to own. I own the appropriate position sizes. I have no rebalancing to do, and it's owned. And I don't have to modify any of it. So that is a very important goal that everyone has to keep in mind. Not just know when to stop buying, know when you've balanced the portfolio, when you've achieved the appropriate portfolio construction. All subjective statements. What, 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 it's only you who could decide what is good, what is bad, what needs adjustment. When is no adjustment required? When are you done? When is the end? When is too much of a good thing is now a bad thing? These types of thresholds are very subjective and for me to talk about, but certainly not me for to define. Hope that helps. Hey, Pusher, how are you, dude? Uh, Consistently cool, calm, and collected since tuning into this channel 4 years ago, and it's gotten even worse or better. Probably better said better. Um, I just, I don't. I was just about to say I don't give a shit anymore, but it's not that. I mean, what's the sentiment? The sentiment. It's easy to say like I'm right, and that quickly comes off as arrogant. But it's not about I'm right. It's I'm right to myself. But that's what I say. Like when I mean what I mean when I say you judge yourself based on your rules. That becomes the measure of success. So I didn't talk about all this shit years ago. You of all people know that, but this is where I've come to. So based on my rules, I'm succeeding, doing exactly what I'm supposed to do. I've acquired what I wanted to acquire, what I needed to acquire. The structure of the portfolio is what it is. The market is going to make the portfolio whatever it's going to be. That's not up to me. So I'm in not no control over that whatsoever. I've said I need to stop because of quantity of cash on hand versus assets owned versus volatility in the market versus uh, personal well-being. And that leaves me in a position where I just get to talk about what's going on rather than thinking about actions to take. I've minimized, if not eliminated, so much of consideration that I have to have for choices and decisions to make. I just don't have to do it. And that is something I'll strongly encourage for everyone. Uh, if you have anxiety or you're frustrated with results, you need to reprogram that. You're looking for results in what? Total net worth? No. You have no control over that. Zero control whatsoever, folks, of total net worth. You have control over what things you buy, what are the rules for what you've bought, whether you're trading at a temporary position, which is not a buy, that's a position, that's work. It's not something I want to do. And you have capacity to control whether you don't do something. You have really a capacity to either do or don't do, take an action or don't take an action. So set rules around those behaviors. And I'm firmly in don't do shit mode, and that's a luxury. That's a freedom in many regards. So I did the work. I came to class early. I showed up at the appointment early. I finished the homework assignment early. I'm done. I did it. And that, listen, that doesn't mean like I already, folks would say, made it or something. I'm not thinking in terms of total net worth. My cash flow is down. This month is 50% reduction in cash flow from last month, but I expect it to go up. But I'm done with regard to the critical decisions with regard to the components of what I own. I don't need to own anymore. I don't need to sell anything. Surely not. I want to own what I own. Bought it for a reason. Hope that helps. Complicated thoughts that I try and express to the best of my abilities. Are you interested in our sub future? I don't like futures. Thank you for the question, though. Isn't that a simple answer? Every time I look into like futures, I'm like, I don't care. I I want to own the casino, but not a futures casino. I want to own exactly what I talk about, foreign exchange. That's the biggest business on the planet, which no one really identifies as a business. They go to their supermarket or their local shopping center, or they go to a bank, or they look at the stock market and look at all the companies. Like those are businesses. The biggest business on the planet is foreign exchange, which is a part of the banking system that you never see. You walk into a bank and you're like, where's your foreign exchange? They'll look at you weird. But the banks run this business called foreign exchange. You see it at the airport a little bit, but it's not the best expression of what it is. But it's really the capacity to convert one currency to another, and that's foreign exchange. It's the biggest business on the planet by far. The second biggest on the planet is the United States government tax deductions. That's a freaking business. What a racket. They literally force you to pay taxes, and they're like, ooh, if you do this, you can pay less taxes. Why is that a business? That's an incentive system. So that's the whole point of business. How do you get people to do something? How do you get people to be productive? How do you get people to manufacture? How do you get people to start businesses? So in a business setting, you do that with compensation. You pay them. In a government setting, you say, don't worry about it. You could pay us a little bit less. It's the same incentive system. So tax breaks is an entire business model. Ramsey's versus Tango for Arbitrum exposure, excess diversification for exposure to Arbitrum. I think that's the right level to think in terms of exposure to an entire market. So the question in my mind, because clearly we have very similar constructions, does it cover a different part of the market? And that's where I'm at. And right now, I'm not sold on like a definitive conclusion on the way I'm thinking, but right now, yes. Yeah, clearly Contango facilitates trading to a degree. It's not perpetual as it's leverage, it's looping. What is it? What are these businesses that we own? Contango does not serve the same functionality or the same consumer demand as a Ramsey's or a Camelot, an exchange, a foreign exchange. Probably falls halfway in between foreign exchange, derivatives. It doesn't offer credit unto itself, but it facilitates credit. So I would say it's closer to an exchange, a leveraged exchange, than it is to like a perpetual, something that offers like 50, 100x. You can't do anything like that on Contango. So it's not quite FX. It's not quite a perp dex. It's kind of in between. It has overtones of derivatives and clearly facilitates credit. Clearly, it's exposure to Arbitrum. Do you need both? I don't know. You know what I hate about the VE NFTs is if you want to get rid of them, it's like a 40% haircut. If you're lucky, 30, 20%. So in that case, in my mind, I mostly say I'm not selling this shit. Because how the hell do you even account for that? I mean, you got to realize from my standpoint, I literally have to justify taking a haircut on a sale. And that's not the proper behavior to take a loss like that. So it's not in anyone's best interest. But the retainment of an asset that literally pays weekly, that is in everyone's best interest. And I'm speaking with regard to beneficiaries, of course. Um, so I stand firm for now to do nothing. And that is the greatest luxury of all. If you're thinking about something and you don't know what to do, indecisive, and this isn't just you, Arrow. This is folks, especially folks that trade or whatever they're how they define what they do. So much more often than not, the best course of action is to do nothing. So that is such a useless statement with regard to like meme coins because you don't even have time to think with meme coins. You're running on pure reptilian instinct to do anything with that garbage. Anywho, I digress. Good question though. George, if you were to accumulate shadow position, what range would you be interested in from a TA perspective? I must be completely honest. I cannot answer that. I have more than enough ownership. It's like 0.1% of the protocol. I have no need nor interest in acquiring any more. So the hypothetical, if I were to accumulate, my brain can't wrap itself around it. I have no interest in even entertaining the question, honestly. Um, Aside from it being a new product means maximum risk. This thing could collapse 90%, and it's literally back to February 1st. So, fine, I'll give a maybe a reasonable statement. Now I play hardball. See if he can get a wicket. $4, 480, 480 or lower. I mean, come on, that's a discount. That surely is a discount. But then, anytime there's a discount like that, you're like, is it invalidated? And then you would look to like total dollars on Sonic for Confluence. Is the protocol in decline? Is the market in decline? But if the market's raging and another AMM, whether it's Wagner or Daniel stuff or um, SwapX, and those are going up, maybe the protocol is invalidated, or maybe it's just people having a 5 minute attention span. So, in the end, the conversations to have is in the future, for instance, is I did this, this, and this. And in the future, folks say, I did this, this, and this. And it's like, oh, that's cool. That was a good choice. That clearly worked out well. Oh, okay. What did you learn from that experience? And then everyone gets to compare to what everyone did and just talk about the results from hindsight 2020 perspective. And that conversation alone gives insight and guidance into multiple people's decision making processes that led to different results. Um, that would be interesting in the coming years because surely we've been doing this for some years, but let's say in 2028, 2030, we'll come back here and folks will have the capacity to make those kinds of statements. Oh, no, you remember back in 2024, 2023, those crazy days, what we did. And we'll have those hindsight 2020 conversations about what we bought good, what we bought bad, and the mistakes we made. And it's all part of the journey, all part of the story we get to tell in the future. Do you see crypto as more disruptable space than meat space? If so, is it riskier to invest tech here rather than meat space? Oh, this is the title of the stream. Give me 2 seconds. Hey, I don't know if you can see that, but this says the best dad ever. Yeah, very important. Be the best dad ever. Title of the stream was, um, uh, I'll get you the title of the stream. Was it Conviction by Invalidation? I think that's what it was. I think that's what it was. Conviction through invalidation. In my mind, in my experience, which is just my experience, because clearly a lot of people are very successful in the stock market. In my opinion, I have no chance to achieve what I want to achieve in the stock market. It's just not going to happen. It's not in my cards. I don't have the capacity, the patience, the time, the energy, or the psychology to trade and focus on net worth. It's not what I do. And it's the core of my stories, what I tell you guys, why I defined the anti-pattern. It's why folks that are novices could clearly label what I do as hodling or bag holder, but I have that deep story that I can tell that's rich and robust of why I do what I do and how I frame things and how I define things and the rules and processes and procedures behind everything I do. So I have invalidated everything else other than crypto. 42, and uh, stock market's dead. There's no hope to get cash flow in the stock market. No hope. I am not a person that could take a lump sum of cash and be like, just live. I'm the person that says, what the fuck am I going to do with this money? So say, how many times throughout history do you hear a lottery winner and they're broke now, or football players, or basketball players, their career ends and they're freaking broke? How many didn't Tyson declare bankruptcy a couple of times? How do you go through millions, 40, 50, $40 million? They could literally just buy 30-year bonds and lock in a couple $1 million a year for 30 years. And that would be a bad thing to do from an investment perspective because it's the shit show in the bond market. But that's besides the point. I can't get away from the concept of cash flow. Cash flow is freedom. I don't want as much money as possible. What I want is the comfort associated with predictability. If I know I'm going to receive capital next week, that allows me to think about what I could do between now and next week. Humans have a relatively short uh, attention span. You think? Now with kids and ADHD and whatnot, my kid included, but humans have a hard time thinking over years. So, could you imagine? You get like 5 mil windfall, and you're trying to plan out your next 20 years. What the fuck? How do you even begin that kind of thought process? Oh, I have 5 mil. What am I going to do over the next 20 years to manage that money? That's why you take money and you own businesses to get revenue because you could wrap your head around how much money are you going to have next week. So this weekly time frame is something that's quite digestible by the human mind. It's something that's comforting, so a time frame that isn't overwhelming. So I cannot do what I want to do in meat space. Real estate's dead. That is completely dead. You're either a very wealthy real estate person who's done it for decades and you have connections to get the credit and you have connections to get the discounts and you have connections to close the permits to improve property and so on and so forth. No, I get all those poor folks, poor souls that bought their Airbnbs in 2021. What an absolute catastrophe that is from a financial perspective. The stories that I read are absolutely gut wrenching. It's a catastrophe. No, real estate's dead. Stock market's dead. Can't do it. But these crypto markets are pre-monetized and they provide financial services, fintech businesses, and nobody sees them as business. This shit screams the most extraordinary place to be. Nobody looks at this stuff as a business. Nobody. All they see is the stupid meme coins and Bitcoin at $96,000 and the price goes up and down and they have no clue why it doesn't. All I see is foreign exchange credit, derivatives, liquidity financing, and liability printing because I defined those industry verticals. Industry, business, fintech. Those are the businesses. I want to own because there's nothing on this goddamn planet that compares to them. So meat space. It's a non-starter. It is what it is. And conviction through invalidation. I have this. It's not even conviction. It. This is the only place to be. So it may appear like conviction. It may appear like I have this undying appreciation. I love these protocols. No, there's nothing else to own besides this that can remotely achieve what I want to achieve. I have invalidated everything else. This is the only place to be. Hope that helps. George, thoughts on the recent findings regarding the Bybit hack? It seems it was safe. That was actually hacked. It wasn't hacked. It was phishing. Uh, Somehow they were able to replace the JavaScript user interface that was being visually observed. Complicated? That is a sophisticated attack. Um, you know, the best thing you could have, Rabby first and foremost, because if you're blindsiding, Rabby tells you it simulates the transaction. So that's a wonderful thing you could do with contract interactions. You can simulate the transaction, which tells you, are you going to get coins in return? What contract are you interacting with? What protocol are you interacting with? If it's a popular protocol and now 5 minutes old. The only thing better than that is a device that executes that simulation on the device. So maybe a Grid Plus, depending on how advanced their software has gotten. Um, but if Rabby could do that simulation in a browser widget, a device could do that simulation in an encapsulated entity, which the user interface cannot be modified. That is the ultimate, um, OPSEC, operational security type of implementation. Just move Rabby over to a physical device that's has all the attributes of a hardware wallet, even Ledger. It's just an enclave for, the private keys and but it has a display that can process and simulate a transaction, which is probably not so easy. That's a fair amount of processing power to probably do, at least present a graphical user interface. So I don't know. I don't know if there's anything that does something like that, but that makes sense to be uh, the only thing better than Rabby currently. You need to see the transaction simulation before you execute anything. How would you build a portfolio if your goal was to have a constant cash flow so you don't need to put time to get a salary? Uh, my man, very big question. You build a portfolio, in my opinion, with a core conviction, a secondary outsized conviction, and then the rest is just small convictions, loosely held, as some would say. So, 50% of the portfolio to one thing, 25% to another thing, and then 25 diversified across many positions. So you're talking about like 1, 2, 3% positions, 4% positions. And you have maybe 10 positions that comprise the 25% bucket. And then the other two, the 25 and the 50, those are literally just two things. So I'm obviously breaking down my relative portfolio composition. Everyone has to define what that means in consideration of their total capital available. Like if you're doing all of that with $10, I'm not saying you specifically, DCA, man. I'm saying someone, that's another story. There's a lot of other considerations there. Um, you're not doing any of this with $10. So that's a non-starter. But I'm sure that that's not the case. You've been listening for quite some time, probably more than $10. But that would be a completely different conversation. Now, honestly, when I talk with cousins and family, that is something I think about. And know thy audience is what my wife always says, and I certainly do that well when I talk to my younger family members. I give them much longer time frames. I give them ideas and thoughts that span 10 years. A lot of dollar cost averaging, but how, how do you how do you teach ownership versus speculation? How do you teach to get over the emotions and the anxiety? That's something only someone could achieve for themselves. It's a realization. It's like a religious experience, if you will. Oh, it's like BitBoy, what he's gone through. And now he's on social media with his religious experience. But it's the same thing for everyone, whether it's a religious experience or not. You have to find yourself. Who are you? What are you capable of? What do you want to be? What do you want to do? What rules do you follow? How do you live your life? It's all the same thing, no matter how you frame it. So I would build a portfolio respecting total amount of capital I have, total amount of money I make from work. I would, if I was young, which impossible to give me advice if I was young, so I would fail as my own parent, so to speak. Stay with stay with your parents. Don't go anywhere until you're 30 and don't do anything. Just get a paycheck and go home and eat out of mom and dad's fridge and invest everything. Because but that's the epitome of like delayed gratification. Like imagine sacrificing your 20s so in your 30s. Is it but that man, it's complicated because imagine telling a kid in their 20s, hey, kids, sacrifice your 20s so in your 30s you have $3 million in the bank and you're making 200 grand a year just off of shit you own. Because that's what it is. That's what it is. Hey, listen, you don't go to college, finish high school, 18 years old, you're making 50 grand a year at Best Buy. Frankly, that's not bad because you probably have benefits as well, like insurance and whatnot. And you're at home and you're investing 40 grand a year. Oh my God, if you're investing 40 grand a year between 18 and 30, by the time you're 27 and 28, you're going to be like, I could probably stop doing this now. By the time you're 25, you'll probably be able to stop doing that as well. That's a 7 year period, 18 to 25. But if, I mean, literally your first 2 years are 100% CAGR, 18, 19, and then 20, it's down to 75% CAGR. Oh my God, your compound average growth rate is insane. And then the amount of accumulated assets is just bonkers because you're just buying more assets. But the kid's not going to understand that. How it's like the South Park, the Cartman episode. How do I teach these kids? You can't. It's not possible. It's not. All I could do is tell the story, and the story would never, ever, ever convince a single kid, maybe one in the entire planet. Everyone has to find their own path and their own journey. So that's why I kind of focus on the rules. Own more assets. Very simple rule. So owning more assets, clearly there's no price involved there. Um, no, meaning like how you're supposed to feel about the value of the assets you own. The rule is own more assets, blanket statement. So logically, at what price do you want to buy the assets you want to own? Cheapest price possible. So these are why these simple rules are hopefully impactful. Clearly, what assets? The right assets. All right, that's a shitty thing to say. Own more assets, the right assets. What are the right assets? Okay, so this is where macro knowledge of how the financial system works comes into the picture. So, but no kid's gonna have that kind of experience. I don't know. I don't have the answers. I literally don't have the answers. All I'm able to do is sit here complaining to you guys that I don't have the answers, and all I have is the questions and the conversation. So I preemptively apologize for not having the answers to a lot of questions. I sure as hell have a lot of shit to say about everything. Wife just says maybe I like to hear myself speak. So thank you all for listening to me. Cap, RSIP futures launch. I mean, oh, resupply. I have no interest in purchasing anything at this point in time. At this point in the cycle, I should probably keep the dollar up. I'll end on like a note on my opinion of where we are. Um, I look forward to it launching and doing everything they say it's going to do, and I look forward to my Prisma being whatever the hell it's going to become. I don't give a shit about 5 year vest. That's great. That's fine. So that's lovely. Not buying anything. Look forward to what it's going to become. That sums it up. Lake Meadows. What's up, Cap and chat? Perfect time to catch your live stream while discussing Sonic DeFi. Yeah, um, this is quite tempting. Uh, I'm just saying that. I don't mean that with regard to me actually taking an action. I would never buy a chart that looks like this. But from a protocol perspective, ooh, one, it's literally 5 minutes old. Um, but 400, these hundreds of percents APR, what does it mean? These are crazy numbers. So what would be awesome? It'd be awesome if you got a fat airdrop here. But that airdrop was not fat. That airdrop was literally 394. So thank you. Thanks to my VEFXS exposure, I got 280 bucks, 300 bucks. I don't know, whatever. It's not, I mean, Shadow is just gross. Shadow is just a gross airdrop. Nice numbers. Arrow knows all too well. How long do these last? We got big old numbers like this with Nile for a while, way over 100% on Nile. And these are obviously larger than that. And how long do they last? Everything gets diluted. Hot ball of money rotates. Attention span is 5 minutes. Look at the attention span on Shadow. It all comes down at some point. Things start to normalize. The hype fades away, and people start to realize, what the hell did I do? I bought something way too expensive. And then everything normalizes. Everything finds equilibrium. Entropy is the fate of everything. So this will find its balance, and we'll see what it becomes. Anywho, hope that helps. What was the TA guy I used to interact with on Twitter? Josh? TA. T. I followed a TA guy. I got nothing. I got nothing. I don't. Sorry. Um, Nothing's ringing a bell. Joel says my audio is in and out. I'm not surprised. I got the shittiest audio in the podcasting business. I got a standard Bluetooth headset. I can put it right next to me. Here's the audio receiver. It's gonna be what it's gonna be. Maybe you get a bull market and I'll get a better microphone. So, it's just, it is what it is. Folks say I sound like a tin can. I got no bass. Listen, I could get a bull market, I'll drop $1,000 on a microphone. But as for now, it is what it is. Thanks, guys. Appreciate it. DCA, man. Thank you. Mateo, welcome, welcome. It's a pleasure. 21, and I would like to start learning about these new businesses and build a rational portfolio. Could you give me some advice on how I should start in this field? So, the concept is interest rates. So, the concept is risk. Where do interest rates come from? If someone is going to pay 5%, it's because someone's taking a risk. The simple equation is, don't let it be you, let it be someone else. And you're like, I'm going to get paid 5% because someone else is taking risk. And that's a concept of credit. Someone else borrows money, they're going to pay interest on that money. And I say to myself, "Oh, all right, I want that interest. How do I get it?" Now, you can't get that at banks. They don't offer it. Um, you know, you deposit money in a bank, they don't give you the mortgage interest the bank makes. So that's just a fact. So in crypto, it just so happens we get interest because other people take risk. It's literally the foundation for Aave. Aave, uh, those are APYs. Here's Bitcoin, and I get paid 0.01%. That's a bad example. Okay, here. On optimism, you get paid 6%. You, Mateo, will get paid 6% on your USDC dollars you put in Aave because someone else is taking risk. Now, in crypto, unlike in traditional finance, these are over collateralized. The the businesses are built different, very different. The businesses protect the 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 creditor. They protect your money over the debtor, the borrower. So these businesses are so remarkable compared to traditional finance with regard to infrastructure and stability. It's really an upgrade over traditional banking and fintech in so many regards, other than the capacity. I don't want to digress. I'm going to pause on that thought. So there's five businesses in crypto. I just described credit. Credit doesn't pay much. All right, 6%. And then folks are like, oh, how do I leverage it? Don't think about that shit. The first thing you got to do is understand it's five businesses in crypto. Foreign exchange, credit, derivatives, liability financing, or liquidity financing, and liability printing. All right, so now you got to understand what those five things are. So I'm not going to overwhelm you. You come back and ask as you learn. Ask AI. AI should be able to explain a lot of those, if not all of them, actually. But obviously, we're here as well and on X and whatnot. But the easiest one to understand is foreign exchange, which I described a bit earlier in the stream. Foreign exchange is an exchange. There's no exchanges that you can own in traditional finance. So you can't buy a piece of the New York Stock Exchange, but in crypto, you can own a part of the business, the revenue that these exchanges generate. Then you're going to go down the rabbit hole of the different exchange constructions, VE, E33, and all these fancy buzzwords. But all that matters ultimately, it's a very simple takeaway. How much does it cost? How much is it paying? And how likely is it to continue to pay? So it takes a lot of time to build a cash flow business, meaning if you're able to get 30% APR, all right, on $1,000, that means you have $300 a year income. Okay, over $1,000. Now, it's very hard to talk about this because I also understand that in the United States, something like 60% of all people don't have $1,000 in their bank account. So probably best to frame the way I'm speaking in terms of like an 18-year-old cousin. Someone who's trying to figure out their shit and not fuck everything up. So they find themselves 40 years old with $1,000 in their bank account. So this is why I say if you get a job at Best Buy and you're making 50 grand and you're able to invest $40,000 a year, live at home, you spend 10 grand, or maybe you ask your parents for a couple bucks and you have a deal where you say, I'm investing and I'm investing hard and I have a plan. That's a lot of money. That's a monumental amount of money that's going to the number one rule: own more assets. And then it obviously spirals into what assets and what is good and what is bad. And they all should have the same equation: pay me. It's a very simple thing. Now, we used to talk about pizza shop analogy. You know, um, I want to invest, but I don't want the price to go up. I don't care about the real estate property of the pizza shop. How much money did the pizza shop make on a Friday? So that's the very simple premise for the core of my thesis. Pay me. I don't care about the price of the stock. I don't care about the price of the asset. Give me money on Friday. Now that equation doesn't work for the speculator with like $1,000. This equation says you're investing, and that requires a very different mental approach or perspective in how you approach everything, especially as a kid. Now my cousins can't do it. They can't. They already moved out. Some of them already have kids in their 20s. They're beyond. You can't save people. People have to save themselves. To save yourself requires sacrifice. Would I have done it? I don't know. Would I have sacrificed my 20s? I mean, then again, I take it back because I did. I just did it in the only way I knew how. And I surely sacrificed my 30s and my health of working, running two jobs for many years at some point in my 30s. It's very hard to think about sacrifice in your 20s. But the equation, the mathematics of 20 to 30 are extraordinary from an investment standpoint. The Best Buy story, I say, if you get a $50,000 a year salary and if you're able to invest $40,000 a year between 20 and 30, you're done in your 30s. You are done. You will have just assets, and the assets make money. So you're investing with your salary and you're investing with the money your assets are making. It's all compounding. And over time, you're just owning a diversified portfolio of revenue, cash flow, salary producing assets. Time is the hardest thing. 10 years and the equations just become inevitable. And literally in the first year of investing, it's 100% CAGR. If you invest $40,000 first year, $40,000 second year, 100% CAGR. That that's an insane reality. But I can't. It's impossible to teach that to a 20-year-old, unfortunately. But you have. So I frankly, I should take pause because I'm just also reading your 21. I was speaking with regard to my cousins, and I'm trying to attempt to deliver some sort of clear advice to yourself while also being 21. You can't teach that. All I could do is try and tell a story about what's possible with time and sacrifice. Time and sacrifice. How do I tell a 20-year-old to that makes 50 grand a year to not spend it and invest? But it's not investing, it's buying and owning. And you see, the thing is, when I say the word owning, it's not investing. It's equivalent to me walking into a store and purchasing an item. That's the mental picture that I have when I say investing. Own things. It just so happens there's crypto, so these things are real to me. It's just as real as this phone sitting on my desk in front of me. I bought it. And it's not a phone. It's just something that literally pays me on Friday. It's real money. It's not anyway. I'm not going to digress because money and principle. It's another story. That's a whole legal consideration. But it's real cash. It's real cash. A claim button and it gives you USDC. That USDC goes to a bank. It goes to a credit card. And literally, you get it and you can spend it. But now it gets depending on how much exposure you've had to the crypto markets. It's the whole education of the debit cards and the bank accounts and the fiat on and off ramps and all of that. Don't neglect the OPSEC, operational security. Doing anything with DeFi, use Rabby. Whole It's a whole journey unto itself to avoid speculation and overcoming the anxiety and emotions of insane, endless price action. Oh, here. Let's see if I can find it. How do I teach this? I can't, but I could say it. Where's my sauna? I firmly believe if you can handle 1 hour in a 195-degree sauna without passing out, you can also handle a 50% drawdown also without passing out. A sauna is great training for investing. I love that. That's great. The total net worth is meaningless, Matteo. It means nothing. It goes up and down and left and right. The only thing that matters is how much damn money you make on a Friday. So if you make money from work, you make it on a Friday. If you own businesses and they pay you on a Friday, you made money on a Friday. If you own crypto, which are really the five businesses, and you have a claim button, you made money on a Friday. So it's all the same thing. And that's what almost everyone doesn't understand. Hope that helps. Not the clearest thoughts, but I tried my best. Lake, question on Sonic. Rings protocol SEUSD depeg yesterday after a large withdrawal. Unit price still below $1. How can one capitalize? Not something I even contemplate. I do not capitalize on opportunity. Um, I capitalize on stability, and my capitalization comes in the form of comfort and absolutely no anxiety in a space, the crypto space, that is overwhelmed with anxiety. So I no interest. But I appreciate the question. It was a difficult question, but I appreciate your answer, Cap. Rational as always. DC8 man in the house. More like a macro guy. JT. It's funny how memory works. He's not on Twitter and X anymore. His name was JT. He's not here anymore. I don't remember his full name. And it's not Justin Timberlake. But it was definitely JT. Just funny. It just oh. You remember JT? It's definitely JT. Family man. Post charts. Pictures of family. It's JT. Audio is clear, crisp. Thanks, Lake. Seasick Viking. Yep. Yeah, look. You follow JT. Yes, definitely. JT Left X, Bitcoin Bear. He had, yeah, he was a good guy. That's why I don't like TA. I don't give a shit about price predictions. I care less. It means nothing. Drive you nuts. Trump tariffs on EU. Um, I don't want to get into politics. It's an endless doom loop of there's always an argument for or against everything. Whatever. There's literally, with regard to politics, there's nothing you could say that could satisfy everyone. Like if I say I hate taxes, pretty much everyone's like, I hate taxes too. But then the person that's unemployed or starving, you're like, we should pay taxes so they can get food stamps. So it's moral and ethical. So you literally can't say anything in politics. You can't win. I don't want to pay taxes, but empathetically, I kind of want to pay taxes so poor folks can survive and live and not die. So catch 22 right there. How do you answer that? Can't. So that means it's death. Anything you say politically. So don't say anything politically is pretty much the number one rule in social media. George, Seasick Viking, do you remember his X tag though? No, no, I definitely. Oh yeah. Oh my God, you guys are great. That was definitely JT. Thanks, Cap. This was really helpful. I hope so. It's a journey. So next time you ask the question, I'll tell the story a little bit differently. Next time you ask the question, you'll have a different experience, a little bit different context. And the whole point is over time, the story evolves and it grows, so on and so forth. George, always a pleasure. Ladies and gentlemen of the crypto space, Wednesday, February 26th at 1:06 p.m. 239 people made it to the end of the stream. I appreciate each and every one of you, and you are all now a little bit more rational because of it. I wish you all a wonderful day. It is only Wednesday, so we have another one this week on Friday. Until then, peace.